This video is for educational purposes only and should not be considered financial advice. My go-to trade setup: the extended candle and level 2 of the market maker model. Intro: what is the extended candle? Combining it with the level 2 entry. Examples. Recap. Intro. Hey traders, welcome back to the channel. Today, I'm breaking down a setup that's quickly become one of my favorites: the extended candle with the level 2 entry. I just tested this on a live chart and it gave me a super clean 4-to-1 reward to risk. So if you're into structure-based entries with precision timing, this is definitely one to backtest. What is the extended candle setup? Let's start with the basics. The extended candle is the farthest candle in any impulse leg. It could also be considered the order block in ICT theory. However, sometimes ICT uses a 3-candle formation as an order block. The extended candle is the very last candle in that 3-candle extension. You can think of it as the last line of defense for price to move past. Once price closes beyond that candle, when it retraces back to it, it will either move past it or retrace from it, and that's the opportunity. So the key rules are to look for the extended candle, wait for price to close beyond the candle's high, if it's a bullish extended candle, or the low if it's a bearish extended candle, and then wait for price to retrace back into it, combining it with the level 2 entry. When you combine the extended candle with the level 2 entry of the market maker model, you get fantastic results. The extended candle of the level 2 entry has 2 different variations. In a normal classical sense, it is basically the higher low created by the level 1. It can be the last candle that creates the level 2 move. However, as we will see in the examples, many of these extended candle entries do not fit this description. There is a variation of the extended candle that is an opposing candle to the left of the level 1 that is higher than the level 1. And the level 2 reaction from that candle is signaling a stronger trend, and price is not going to go all the way back to the extended candle from the level 1 move. Examples. Let's take a look at some examples. So if we go down to our 1-minute chart, all of this has to converge, of course, during an ICT kill zone. And these are 2 trades that I want to show you all. This is during the Asian session. So the Asian session has started and we had a 1, 2. So this is level 2. Actually, sorry, this is 1 and this is level 2 and then 3. And 3 came back and retraced back into this liquidity void here. But that was right before the Asian session. And so we had another level 1 and another level 2. And now we are in the Asian session. It's 205. Price dips back into this extended candle. So this is where I want to get you all to focus on this concept. The swing low basically creates that extended candle. That's what I'm calling it. This is a swing low, swing low, swing low, another swing low. This is also a swing low, but these are the extended candles, and you want to pay attention to these because that's the reaction that you will get from price action. The tops is what you want to pay attention to. So as we see, this extended candle got tapped into, and then we move up, come back down. This extended candle got tapped into. Then we see price move up. This extended candle got tapped into, and that's where the move comes from. So this move comes down, and then this last extended candle is tapped into, and I saw the move occurring. I didn't wait for it to close because this was all cleaned up. There's no more extended candles. So that's something I'm looking at. Is there anything else to impede price action? So the price movement that happened here, price moved up. I entered. I set a 2-to-1, and that is where the 423 Fibonacci extension is. And we sort of consolidated before we even touched it. But something told me from looking at this wave move on the RSI that we were going to get another push up. And my limit is the 561 Fibonacci. Once price hits that, I'm out, because that's what we see here. You saw this big move to the downside. And if we look at the other trade here, this was during the end of the Asian session. We have level 1, level 2, and then that's level 3. And so I waited for this level 1 and then this level 2 here. That's when I entered and took price all the way up to beyond the 361 Fibonacci extension. We had a really strong move to the upside. So I just wanted to stay with it. But also, I was using this RSI to see if price would close below the 70 level. And it did here, but I had not reached my 2-to-1 yet. But once I reached my 2-to-1, I looked to see if price was giving any indication of turning over, and it did so here. And that's actually where I got out. I actually got out up here, and then I had another trade on, and I left it to see if it was going to be a runner. But then I got out once it started to dip past the 50% line. So this is something I want you all to back test and work on. And you can also use them as entries. This is an entry here, right here, when you see the dip down into this extended candle, this one right here, this extended candle. I can draw that out. So use those extended candles as entry points, the ones that are farther to the left. Look for those while price is moving up or down, and use those as entry points. If we look at this example, we can see a level 1 being created and then a level 2. Now price does not retrace back up into the level 1 extended candle. However, the candle that did make this level 2 was an extended candle. As you can see right here, this is a high, and the 2 candles next to it are lower. That's a swing high. Once the level 2 is created after this candle, which is a low with 2 candles that are higher on either side, this one goes into this candle, and then it moves to the downside. This is an extended candle right here. You can also use this extended candle to the left, which is part of what we talked about earlier, in how extended candles before the level 1 price action can be used as levels to jump off of. Now I'm going to briefly go into an idea that I'll cover in another video, but if we look at extended candles to the left of price action as part of the market maker model, we can see those are the points that price is going to use to jump off of, which happens here, which happens here, and happens here. So at each level of the market maker model, price used that extended candle as a jumping off point. 1, 2, and 3. It's what ICT talks about on how price action that's formed during the market maker model is the basis for the opposing move. So we have level 1, our level 2 break of structure and break of trend line. We have an entry from this extended candle. Then we have our level 3 created, then another level 1, and then a level 2. And then we can enter when price taps into this extended candle. Now again, you have another extended candle over here, and we have this one over here. We can use either of these as our jumping off points, and we can use them as our stop losses as well. Both of them are respected. As we see up here, this stop loss up here is respected. Recap. To recap, using the extended candle with the level 2 entry will increase your chances of getting a more accurate entry and also getting a higher reward to risk ratio. You can use the extended candle at the origin of level 2 or the extended candle that is higher than level 1 for your entries. This will give you a better reward to risk context for your trade. Thanks for watching. By popular request, I've launched a Patreon where I share my weekly trades and show exactly how I apply my strategy in real time. Plus, I've set up a Discord channel so you can ask questions and learn with others. I'll be checking in each week to answer questions and offer insight. If you've been wanting to dig deeper and grow as a trader, this is a great way to start. Check the links in the description and I'll see you inside.